Got cut off again there. So continuing on with the CL analysis here on the 4-hour chart, we can see the divergence is very pronounced. You had the higher high in price, but we had a much lower high on the indicator, showing us lack of momentum and a possible pullback. We were waiting to see if we could confirm all those on the daily chart with a break below 78.63 for the new low. As we pull back, unfortunately, this won't hold as demand because we've already, well, maybe it's a new zone. We did hold the previous zone or break the previous zone. We had rally, base, 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 and rally. But there may be a new zone that forms here with a drop, base, and rally with follow through. Also happens to correlate with the 23.6% retracement of the previous move as well. As you can see, there's really not a great zone here. The next area, yeah, we do have one. We have drop, base, rally right at the area of 50%. So the two targets I'd be really focusing on if we start to break down from these highs, once you break the low here at about 78, what did I say it was? I took it off. 78.68. Now, you could take a counter trend trade here, shorting the break of 78.68 or waiting for it to close below and retest, but place your stop basically one average true range above. So when I'm looking at average true range, that tells me the volatility of the security. We go right here, ATR, average true range, and that's about 97 cents on this time frame, which is a 4-hour time frame. So if you were to go in at 78.68, I'm going to cheat here, so I don't feel like doing this in my head. 78.68, basically you'd be adding the 97 cent ATR, and your stop loss should be 79.65. So clone that. Settings, change the color. 79.65, and we might as well put that in, stop loss. So looking now, again, this is very risky because it's counter trend. Remember, the overall trend is to the upside, so you're usually better off trading in the direction of the dominant trend. But since we're expecting a pullback here, once prices go below the 78.68, you can either be aggressive and short right away, or I typically wait for a close below that area on the 4-hour chart, short the retest of the 78.68 with a stop loss at 79.65. First target, I would actually try to target this Fibonacci retracement inside of the zone at about 75.78, with the second target being the 50% retracement right around 70.90. So I want to get out just before that area. Once we hit any one of these levels, you may actually be able to go long, and what we would do for the long is target Fibonacci extensions. I had 81.45 as our first target to the upside. So really, I'm trying to be patient and wait for the long. That's the best opportunity. But in the meantime, if we know there's going to be a pullback, we could potentially short the pullback. This gives you extra trade opportunities, also increases your risk. So you got to keep that in mind when you're looking at the markets. But that's what I'm looking for on crude oil for this week. And if you want to learn more, you can follow me both on Twitter. I'm at TraderBDub. Put that in. And you'll see more of my analysis almost every single day on the futures markets there. And you can also be more than happy to have you follow me at the E-mini Think Tank. So you can message me for more information. The E-mini Think Tank, we get together live 3 days a week and analyze the markets in live market environments and see the real opportunities that are out there. So until next time, everyone, trade safe, trade well, and take care.